Welcome to the Bank Tellers listeners. My name's Zach Anderson Pettet, VP of Fintech Strategy here at Money 2020 with the man, the legend, my old friend, Mike McCrary from LSBX, who I actually met when I was VP of Fintech Strategy the first time. This is my second time having this title. The first time was at MBKC Bank, and that was like a lifetime ago, but that's where we initially met. And you're still fighting the good fight. I've come over to the dark side now, but you're still fighting the good fight in the community banking world. How you been, Mike? Welcome to the show.
Good. Thank you. Yeah, doing really well. We have been at it for a long time. LSB has been involved in fintech since 2013, 2014. I can't remember when I made my first trip down to see NBKC and all the folks there, but it was great. A lot has changed since then, and we're still excited about the future.
Yeah, I think it was an introduction from another fintech legend, Ben Milne, if I remember correctly.
Probably, yeah.
Yeah, and I think tried to like put us all in a room and create
what happens.
Just try and create some magic as Ben does. Tell us, Mike, I mean, we're going to talk about you, but let's kind of start with the bank a little bit because, as we do in banking and finance, we open with acronyms, right? And you actually have one of my favorite brands that you guys shorten with Lincoln Savings Bank. So tell us a little bit of the history of Lincoln Savings Bank and how that led to this unique thing that is LSBX.
Yeah, so Lincoln Savings Bank, we're a community bank in Iowa, 16 branches, 1.8 billion in assets. Been doing banking since 1902.
Wild.
Fun fact, just for the nerds, we were founded as German Savings Bank in Berlin, Iowa. And then in 1917, there were kind of actively interring German-speaking citizens in the United States. And the folks of Berlin, Iowa said, it's time for a change. So they changed the name of the town to Lincoln. And the bank said, probably a good plan. So we did the same. So we've been Lincoln Savings Bank since 1917. The same organization. Obviously, charters and things have changed significantly since then. So that's the long history, the distant history. I've been with the bank for 23 years now. I've had a couple different roles. Came into fintech from the marketing role, and really it was kind of a confluence of everything that was going on with digital marketing. And so this kind of nascent idea that we could connect directly to individual customers and put unique messages in front of them was all new and kind of coming to the top. And we were doing a lot of experimenting with that. And the idea then came to, well, if I can attract a customer or put a message in front of a customer, I need to be able to seal the deal. They need to be able to open an account and engage with us. And that was kind of the gap. And so started having some conversations around, and we initially connected with the folks at then Social Money in Des Moines, Iowa. They were acquired by Q2, and they're now Q2 Helix, and kind of sorted out this idea together of being a bank sponsor for a fintech. And we boarded our first fintech client together called Capital with a Q. They were based in Stockholm, Sweden at the time. In 2014, I don't want to go through all the dates because I'll get them all wrong. But
that was the formation of fintech, right? Like, we don't talk about Capital with a Q much anymore, but like that rules-based savings,
it's brilliant.
And it was completely brilliant. And that was one of the cool, like that was, oh my God, this is going to kill me. Digit, I think it was the name of it, that did the auto saving. Those two, I think, were like really. There's probably a few more out there, but those two and maybe like a Betterment or something, I feel like we're really right on that cutting edge and really like showed us what was possible. And there were like 3 banks doing this at that point. Right. LSB was one of them. So you guys had this, like, I remember, really cool shine, and still do have this really cool shine, but now fintech's matured in a way that's different. But it was like, holy, look, I'm in Kansas City. They're right there. And they're working with the coolest fintech company that it was just a very mind blowing thing, but it says a lot about being on the, bleeding, if not cutting edge of something and seeing something that I don't think other people did really.
Well, and I mean, I don't want to skip over the Q2 relationship. I mean, that was absolutely crucial because they had, through their work with Smarty Pig previously, sorted out a lot of the problems that we knew we were going to encounter, account opening, all the different things. Them being central to, and in a lot of ways at that initial stage, leading that interaction was vital to the thing taking off as it did. Really pleased with that long-term partnership. And obviously Capital is still a client of the bank today. So it's an 11-year and running fintech partnership, which alone is kind of crazy. And to your point, it's like back then, the fintech opportunity was to solve problems that banks kind of struggled. We couldn't really do. So in other words, for us to build and deploy technology in a local footprint that did what they did, and that is we have a problem saving. How do we make it easy? How do we make it fun and engaging? And how do we automate it? I mean, that'd be an immense undertaking for a bank. And it really wouldn't make sense given our typical footprint size, right? And the number of consumer accounts that we have. And we're a commercial bank. We bank businesses as well as consumers in the communities we serve. It just doesn't add up, right? To develop that kind of technology. So to partner like that, was really eye-opening on a lot of different levels. And like I said, it's a long-term partnership. They continue to be doing great, and we're pleased to work with them.
Yeah, I mean, it's one of the things that when I was in MBKC, I thought was really interesting. We were also a Q2 partner at that point. Helix was still just something we talked about with DNA. Wasn't the name of that yet, but we were a Q2 partner, and it was interesting to watch us simultaneously do a lot of work with all sorts of different partners. Right, Q2, a whole all kinds of different like unique kind of plugins into the mortgage system across the board, and at the same time in a parallel path be building our own technological competency, I guess. Like
Right.
when I got to NBKC, I think we had like an IT guy, and when I left, I think we had 12 developers, a chief technology officer. Like it was a completely different situation, and it made me realize that the average bank in the US does not have a developer on staff, probably does not have an engineer, rarely has a chief technology officer unless you're talking about one of the big banks.
Right.
So how has I guess I never really even knew much about your internal engineering back in the day, but how has that changed, the internal competency piece?
Yeah. So I think for us, and NBKC was doing a lot of amazing things and continue to, and I think they were early in like that idea of bringing in developers. We had
Mm-hmm.
conversations around that, but really through our growth with the fintech partners that we had, uh, the area that we needed to execute growth in, I don't want to say urgently, but with speed and timing, was really the back office compliance, risk management. And so
Yep.
it really made sense for us to bolster those areas and bring in some excellent people there, because we already had some sense of scale going in, and we had great technology partners. So it really wasn't incumbent on us to really build the technology layer. That's
Mm-hmm.
been coming more recently, and what we're doing today is creating API access into our core, so we can directly connect with the fintechs. Um, and it's kind of a different slice of fintech that it works for. I
Mm-hmm.
think the middleware solutions still play a very viable role for a lot of different models. In some ways, a very crucial role, right? And it's not necessarily just because it's like the small ones need to go with a middleware provider. I think there's some great, very large companies that makes sense for. It's just who's going to take the burden, where do the roles and responsibilities lie, and at the end of the day, who picks up the check for the work. And so, I think for us, like I said, for a while, a long while, really building out the processes, the systems, and establishing the people and the roles to be able to handle consistent growth, as well as the customer base that we'd already amassed at that time, really made sense for us. So we really didn't kind of turn the corner into thinking about bringing in development resources until much more recently.
Which mirrors the entire conversation we're having, right? I mean, in the beginning of, in the early days in a Galaxy 5, like, yeah, I mean, back in that day, that was the question. The question was less, how are we going to get the account open? It's who's the program manager, which
Correct.
is, not a term that we hear that much anymore, because things didn't go that well a couple times, and now we know who the program manager is going to be. It's going to be the bank,
Exactly.
you
Yeah.
know, and that's just how that's going to work. So through those shifts, those ups and downs, and you all figuring out the compliance pieces and working with middleware providers that are incredibly important, and if they do their job well, are some of hopefully the best reg tech solutions that exist
Right.
in the entire world. And then all the way to today, where, as we alluded to, there not is really not an option for a non-direct relationship and to start building all that technology yourselves. And I imagine you're, well, I'll guess, and then you tell me if I'm right or wrong. To your point, the type of customer is not just a different kind of fintech, but maybe not a fintech. Like, are you seeing a lot more e-commerce, seeing a lot more kind of wanting to vertically integrate some unique payments or savings thing into an e-commerce thing that has maybe nothing to do with capital with a Q, like we've talked, like kind of
Yeah.
completely different animal?
Yeah, it's exactly right. I think, it's funny because one, I kind of joke. It's like, and with some of the folks that formerly have capital and stuff, it's like we're fintech's grandparents in a way. But, when you've iterated through a couple things, when the phrase banking as a service first started popping up, I hated it,
Mm-hmm.
mostly because just from a branding standpoint, it seemed to put the bank in the background. And I thought, one, structurally, when we very first engaged this, the only principle we had was it's got to be a direct relationship. We didn't even really call it that. We just thought about our fintech partners kind of on the same level as we do a long-term loan, commercial customer in our local footprint, right? It's about long-term relationship building, long-term partnership. And that's really what I think where community banking comes into the space real well. So I didn't like banking as a service because I felt that it kind of, like I said, put the bank in the backdrop. And then today, I don't hate the phrase as much, but I hear embedded finance a lot. And it's like, well, let's be careful what we think we're embedding. You know what I mean? Because you don't just embed the bank into something else. It's more complex than that. And I think it's a little more elevated than that. So I don't know what the right word is. I'm not that smart to come up with the right word, but I'm going to cautiously watch as like this notion of embedding finance like takes off. But to your point, there's a lot of companies, and I think in today's world, and has been for a long time, honestly, most companies are technology companies at some point. And if you go down into an industrial park and walk into a trucking company and look at their back office, that's a technology company. There's a ton of tech going on in there. And so it makes sense, whether it be that trucking company or this e-commerce company or whatever it is, that they're going to look at things like money movement, money storage, maximizing, whether it be interest on money, minimizing speed of turnaround, um, or maximizing speed of turnaround of funds. That all makes sense. And it's not just in the domain of a fintech. So we're going to start a new company and be a fintech and we're going to do things fast and efficiently. I think it's any business that really has a mind on, like treasury management is what we would call it, but thinking about how can I gain efficiencies in there and how can I do it in a way that I'm not reliant on some of the older structures that were things like treasury management that work excellent for very large businesses, big gap in the middle, as we all know, opening up API access to a core and letting a tech kind of, company that, or a company that has a lot of tech on board and a lot of technology oriented people utilize that for things like funds flows. It just makes a lot of sense. It doesn't diminish the role of the bank. I mean, the role of the bank stays the same. We're the chartered entity. We're regulated. All that burden continues to rest on us as it should.
Well, yeah, and I mean it it really positions the bank as the linchpin, which it has been the entire time, right? At the end of the day. And I think that's the if we have learned anything from attempting to obfuscate the bank into the background, it is that that does not go well, and generally, and we will be looking for the money for some period of time, right? I mean,
Yeah,
it's
exactly.
it's we're still unraveling the insanity that is the Synapse experience, right?
Right.
And I mean, even just you and I both were there in those days, right? We
Yeah.
were there thinking about Q2 versus Synapse. We were there thinking about these choices. And I mean, I when I went and joined Bond, a big part of joining Bond was feeling as though maybe some of the compliance checkboxes were not showing up and some of the regulatory technology opportunities were not being taken advantage of. And anyway, it's very interesting to see how the world has unfolded since we first met,
For
like
sure.
10 years ago or
Yeah.
whatever it
Yeah.
was. So, Mike, let's get a little bit more into you because you, as you said, you've been at the bank for, MJ number of years. I think you said 23. So, how have you scaled yourself, right? Because you starting in a marketing role into all of the knowledge that you have now across every bit of it, going from, indirect to direct to all of these different things, right? And having seen what you've seen, I imagine it has taken some work beyond, just the conversations inside of the bank, right? A little bit more than just osmosis of conversation there. Um, so, how have you scaled your knowledge? How have you kind of grown that perspective in your own view?
Yeah, I think a lot of it is really just relying on the knowledge of others, right? So we brought in some excellent people with great backgrounds, and you know, there's a little bit of credibility you get for having done it for a long time,
Mm-hmm.
but there's a lot of people who've been in it a lot more recently, and they've learned a lot, and their perspective is different. And I think to look at anybody who's in this space or adjacent to this space, and really take the opportunity to reflect on what they've gained and their knowledge and relationships they've built and their experiences, and in particular, if it's experiences at a different bank or at a fintech, I mean, I hope that nobody ever thinks, well, we can't try to impress this on Mike because he's old and he's kind of stuck in his ways. I think the opposite is true. I'm very open to hearing and love to hear different perspectives and different experiences. And I think as long as like you maintain that kind of curiosity, I see that in you too, right? I mean, that's I think what compels you in doing a lot of the things that you do is just this curiosity and just loving to hear other people's take on it and knowing that their take could really, inform mine in an important way. Um, so I think there's like the foundational things that are just structural and necessary: banking, regulatory, the charter. These are the things that we're not going to get nuanced about ever. But in terms of like, how can we better serve customers? How can we serve a larger customer base? How can we, find ourselves into a slightly different market or different verticals? Though that's just anybody's, a best guess at a time. And it takes being curious and listening to people and always being open.
Yeah, the curiosity muscle I think is impossible to, I mean, if you have it, it's impossible to turn off. And if you don't have it, it's pretty hard to, I think, find yourself in really random opportunities. Like, I think there's something about curiosity that just puts you in weird ass situations
Exactly. Yeah,
that
yeah.
you just never know how it's going to actually shake out. But so I was watching, this was last night, and uh JP Morgan Chase recently put out this like leadership kind of retrospective. I don't even really know what you would call it, but it's basically Jamie Dimon talking to 300 of his, main executives, which when you start to think about the scale of 320,000 employees, and it just doesn't make sense in my brain how you can lead an organization that size. I was listening to him talk, and I was thinking about how much he was actually talking about banking. We don't talk about banking that much. Like, we talk about a lot of technology. We talk about the consumer. And it's right. It's like why you get into fintech. It's actually the more fun stuff. But I'm kind of wondering, is like, as fintech has matured and gotten cooler, is the real competitive advantage over the next like 10 years actually going to be the folks that know banking? Like, I'm kind of wondering, should I have gone to banking school when I was at MBKC? Because, it is an actually, in my opinion, impossibility to learn and know everything about this industry.
Absolutely. I think it's absolutely true. And I think, there are people that spend their career on one side of the balance sheet or the other, or on one side of
Exactly.
the transaction or the other. And the intimate details just in a debit card transaction
Yep.
alone, it can be a career's worth of knowledge, right? So I think my perspective is like in the bank, there's the experts who understand compliance and they're responsible for compliance, but everybody's involved in compliance. There's nobody that gets to say, I don't have a stake in compliance.
Mm-hmm.
Nobody gets to say, I don't have a stake in risk. Nobody gets to say, I don't have a stake in the balance sheet. None of the things. I think to your point, for me, I guess I'll just say it that way. It's really, really important to be bedrock foundational on the basic banking principles. And a big component of that is knowing where in your organization the expertise lies. So
Yeah.
that I'm never going to put myself out front and represent, one side of the balance sheet or the other. We've got experts in house who do that. And they love doing that, right? I've never had a conversation with anybody about anything within the bank where they're not enthusiastic to share their position, and why not take advantage of that? So I think there's like kind of a need in some ways for me, because I lead business development, right? So I have to encapsulate the things that we do and encapsulate the direction and be able to communicate our vision. But then a huge part of that is, trust me, this rests on a lot of other people who are a lot smarter about some of these details than I am, and we can have those detailed conversations. So I hear the question is like, if somebody's getting into or has a great idea for fintech, they need to really integrate with the bank and really understand, okay, bank, where does this make you nervous? And don't tell me that you're just going to make it easier, or tell me that we're going to, do something with technology that the compliance doesn't matter. The compliance always matters. The risk always matters. The balance sheet always matters. The regulators always matter. There's no skirting it. There's no like, making it simple or easy. There's ways to make it more efficient, and we're definitely hearing about that. But yeah, I think anybody would tell you, surround yourself with great people and you look better.
Yeah. Well, it's also interesting that you frame it that way, because I mean, I've asked that question before, and a lot of the responses from high functioning, high power, high output individuals, as I talk to other people that also spend a lot of time developing opinions, but I can't remember if anyone has said that specific thing about their own organization, which I think is interesting, right? Because there's a delineation between like I learned by having a conversation with like Dave Birch, a Simon Taylor, a Ben
Sure.
Millen. That's those are big brains that everybody's pretty aware of. Versus like here's an example: Eric Garrettson,
Yeah.
Melissa
Yeah.
Eggleston,
Yeah.
right? Two
Yeah,
two
for
foot
sure.
Mike, Brian Unruh, that entire executive team from NBKC. I would say I mean, I still think I'm scratching like 5% of knowledge or something like that, maybe less around. It's such a complicated industry, right? But I wouldn't be even over 1% if it wasn't for those individuals. And also their curiosity and their kind of
Exactly.
over explaining to the new kid and all that kind of stuff. The generosity of knowledge sharing in our industry feels very important actually when I take a step back and think about it.
Well, it's interesting because I came from a different industry 23 years ago. But this idea of even, and this sounds weird, but peer groups. I mean, these
Mhm.
are our competitors. Why would we get in the same room with them? But then I started to understand it, even from the marketing perspective, and that role is that knowledge share and then openness, and in being able to get together, yes, as competitors, but also acknowledging, the areas that we serve, and some differences in that competitive landscape, and even working obviously with banks and bankers from other competitive areas. But that was kind of a novel idea to me, to have a peer group of competitors, and be gaining from them. And to your point, it's like, yeah, if I want to go have a great understanding of commercial lending, I mean, some of the lenders here at this bank just,
Mhm.
just I'm constantly amazed by, because they're doing it. I mean, they've been doing it for years. We've got I don't want to name names, but one guy I really admire, he started his career like at the tail end of the farm crisis. And he does a lot of ag lending. I mean, you want to talk to a guy who just knows that and knows customer relationships. He helped me so much in understanding bank marketing back in the
Mhm.
day. Because it's not just about putting up a splashy message and getting eyes. It's about developing a relationship that might last multiple generations. So there's a weight to it. And I think a lot of the people here that collectively understand that and individually have brought expertise into themselves from the resources that they take advantage of. It's there's a lot to tap into there, and yeah, don't be afraid to walk around the corner and find an expert.
Yeah, and I mean, you mentioned competition. I'm curious when again we're just like comparing everything to when we first met. But when we first met, I think the world of I think it was pretty clear that fintech was not going to be like a zero sum game that just one bank was going to
For
win or
sure.
something like that. But that feels really clear now. I think like we all very much agree that this is going to be a co-opetition sort of thing. I'm curious what you think of some of these more novel banking as a service focused banks. Thinking about like Lead and what Jackie and team have done since taking them over, or even what William Hockey and team have done with why can I not think of the name of that bank now?
McCollum.
Thank you, Column. Curious what you think of those and what you think of just the competitive landscape in general, I guess.
Yeah, so I wouldn't really portend to speak, specifically about a competitor, but generally speaking, from just bring it back to like the community bank level, it's a good environment when in a decently populated area there's multiple community banks, because we are competing for sure. But what that just makes it a better landscape for
Mm-hmm.
everybody, because every loan that walks in the door might not be right for us. And it might not be right because of the timing, because of concentration, because of what their demands are, or lots of different things. That same loan might be a great fit down the street. So when there are good competitors in a market area, it actually elevates everything. I think it makes it good. And I think the same thing is absolutely true in fintech. There's a lot of models that we just wouldn't entertain. They don't fit in our risk profile. It could be 100 different reasons, but they may be ideal for another bank. And so it's not uncommon, like, to end a conversation with a prospective fintech partner and then call up another bank and go, "I think you might like these guys."
Yeah, make an
And they're
intro.
not going to be a fit for us. You're not going to throw any shade on it, but it's like it's just not going to be a fit here for us. But I think you might like to take a look at them. That happens a ton, and I think
Mm-hmm.
that's really, really good. It's also good for the fintechs, because where we want any good relationship to be a very long one and be very profitable for all parties involved. There needs to be, and I think a lot of fintechs are realizing this. I think the industry is realizing this. There needs to be a second place to go to if things don't work out. We don't want to leave a business high and dry, but if it's damaging to the bank, we can't continue it. So I think having a competitive landscape, having competitive peers, I think makes a lot of sense, and it's good for everybody. Nobody wants to suck all the oxygen out of the balloon. It's just got to be take what works for us, take what we can handle, take what we can do very well, wash, rinse, and repeat that, and I think it just makes a lot of sense.
Yeah, I think a lot of the maybe not so positive news in the embedded finance, embedded banking, banking as a service, whatever API banking space is a long-term positive, right? It is, from my perspective. I'm curious what you think, but would have been great not to happen.
Yeah.
But I guess I'm picking picking this perspective.
Choose
Um,
optimism.
I feel like we kind of needed a punch in the gut. I don't know, phrase it how you will, but it kind of seemed as though we didn't. Did we need it? I don't know, actually. But are we going to learn a lot from it and end up better and stronger and more fortified for the longer term as an industry? I think so. I think that it's actually going to, because I mean, I would think it only not spells good things, but spells more business, more conversations for the LSBXs of the world. Spells, we have built a robust enough embedded banking market now that is not the end of it. And I think that
Correct.
if anything else, that's also a really good sign too.
Yeah. I mean, I think it's clear that when customers are exhibiting a huge desire to use services like this, right? That that's great that the market follows that innovators develop around that. And it's also great, quite frankly, that we've got a regulatory landscape and structure that keeps it between the ditches.
Mm-hmm.
And we can, flail about regulatory overreach or things like that. But at the end of the day, what do they want? Right? They want a safe and secure banking system. Who's going to get mad at that? So, it's up to us. We're a business to have those conversations with our regulators. I think it's probably put a lot of banks in the position of having much more proactive relationships with their regulators, which is an excellent thing. I mean, it used to be kind of like you would never pull over a state trooper and say, how's my driving?
Right.
Um, but to be able to show or have a conversation with from our risk area to our regulator, say, this is what we're thinking about doing. And they're not going to say yes or no, but they're going to say, well, you might want to think about this.
Right.
Great. Why not avail yourself of that expertise in the industry? We might not always agree, but at the end of the day, if you just keep a focus on, just like that state trooper, his job is to keep the traffic moving safely, period. And I think at the end of the day, our regulators just want a safe and secure banking system. They're not opposed to innovation. And I think in a lot of ways they've encouraged it.
I think
Um,
so.
and I think where, some areas of focus that were generated by some recent actions, yeah, I don't love that it happened. It left a lot of shrapnel being spread around. But at the end of the day, I keep saying end of the day, um,
At the end of the week,
ultimately,
ultimately,
it puts us in a
in
better spot.
conclusion, yeah,
And to wit,
exactly to wit. I mean, yeah. I think I've met maybe one well, he was on a Zoom call and it was on our main stage last year. And I guess I didn't really meet him. I just kind of offended him in the intro, and it is available on YouTube if you would all like to watch it. But it was the Gary Gensler interview at Money 2020, and I didn't know he could hear my intro, and he could. It was a little awkward. But anyways, I think he had been offended by the internet enough times by that point that it really didn't matter. But
okay.
having met Mr. Sue, the acting comptroller of the currency, the Yellen and McWilliamses of the world. Like I have yet to meet a regulator that's not fascinated and curious and wants to get your opinion on technology. That is to the point of all of everything we're talking about. Like, I think, again, we still think of regulators as like a different species or something, but they are often just very normal humans coming from where we're coming from, trying to do something, and very often going to end up in the private industry after if they didn't
That's
already
right.
come from it. So
Yep.
yeah.
Yep. Make good friends.
Yeah. All right, Mike. My last question, my friend, is having been, in the world, around the fintech space as you have, and grown in your career as you have inside of this. I'm curious what advice you would have to kind of, the average listener that's thinking about kind of getting into fintech, getting into the world of banking, or, they're early on in their banking career or finance career and wanting to grow. What advice would you have for a young gun trying to get in this world?
Yeah, and that's a great question. I think one sort of foundationally is like we were talking about earlier, just be curious and be curious outside of the discipline that you're working in. Stay in the lane, do what you're paid to do. But when you have an opportunity, if you're not working in commercial lending, to talk to a commercial lender and ask them, what are the pain points? What to you makes a good loan work? Because if you're in marketing, you need to hear that. If you're, on the other side of the balance sheet, you need to know it. So I think just that curiosity up and down the org chart, just be a sponge and learn stuff. If you're thinking about, going into a fintech, I think very similarly, I would go and talk to some bankers and maybe talk to bankers who have really not a lot of idea about fintech, but
Mm-hmm.
just what's their first take, what scares them about your idea or what excites them about your idea. Because I think you'd get a lot of great insight. And lastly, and continuing like the thread of like if it's going into a fintech, um, always know that the banking element of what you're doing is a central and important role. We are the regulated entity. And so you're not doing something that's on top of banking or apart from banking. If you're wanting to build something that involves banking, it involves banking.
Mm-hmm.
And so the partner selection part of that really goes both ways. The bank is going to do a lot of due diligence on you as a fintech. You need to do your diligence on what you want as a bank partner. And going into that understanding, because otherwise you don't want to be a fintech who's just like takes anybody who will throw their charter at you, because you might not be around in 2 years. So I think the diligence has to really be, both sides checking each other out for suitability. Are we going to be good long-term partners? Does my vision conflict with what you see as important? What I want to do as a fintech this year, next year, 5 years from now, does that give you the heebie-jeebies? Or are you excited about that? And I think I love to see a fintech that even sends over like a document. Hey, can you fill out this questionnaire? We're just kind of doing partner suitability. Like that's awesome. They're taking it on themselves and wanting to understand the kind of banking partnership that's going to make them successful because it'll make the bank successful too.
That is a beautiful takeaway, a wonderful spot to end it, and go learn more about banking if you're
There you
getting
go.
into
That's it.
banking. It's it's hilarious that we even say that out loud, but it's a thing that I had to get smacked over the head with over and over again, and I'm still really wishing I had even asked more questions when I had the chance. And every time I see anybody, I'm asking them. So I think it's great advice, Mike. Thank you for the time as
Sure.
always, and we'll have to do a catch up down the line, see how things are going
Yeah,
in Vegas.
absolutely. If not before, we'll connect with Vegas.
I love it. I love it.